Back you guys to Andy the Banker Show, and for today's episode I wanted to share with you my performance for 2024. Happy New Year's to you guys for 2025, and how did I do, and what is my plan with investing going forward. So this year has been pretty tough for me, I'm not gonna lie. All right, as a public investor, I've my yearly return for this particular portfolio is 17%, whereas the S&P 500 for the year has turned around 24%. So I'm trailing the S&P 500 for about 6 to 7%. Now, when we look at my portfolios one by one, all right, there's a couple of issues that occurred during the portfolio. One of them was Microsoft. All right, Microsoft actually trailed the S&P 500 this particular year, with it being 13%. It was not a very big year for Microsoft. One of the big headwinds was that with Microsoft, they were spending a lot of money on AI with not a lot to show. And this is something that I believe can be a turnaround story for 2025. And I'm going to keep on investing into Microsoft because this is a company that I remember in the years past, during when we had bad economies, that was a company that could still make money. And that's one of the things I truly believe in. With the AI revolution, people are so focused on the chips, but I actually think with that much data that you have to train AI on, you have to be able to store that data somewhere. All right, AI requires so much data, and as a result, I am bullish, very, very bullish on Microsoft's cloud business, and that's still the one that I am fully banking on why I am investing in Microsoft. Now, if they happen to hit it big with AI generation revenue, great. That is cherry on top for me. But the main reason I am thinking that for 2025, there's going to be a bigger, better year for Microsoft is because of the cloud industry. Now, the second company that I've been invested in is Alphabet. Now, surprisingly, for the longest time for the year, Alphabet has actually not been doing so well. It was underperforming the S&P 500 until essentially the last month or so, and it ended the year with around 37%. This one actually did surprise me a ton. All right, the whole year the company has been in negative talks because of the legal lawsuits regarding the ad search business. The reason why I still kept on being invested into Alphabet is because this was a company that almost every earning report, when you looked at it, the financials, the business was still growing organically. You look at the YouTube business growing, you look at the cloud business, that one is growing double digits. You look at even the ad search business, the business that's the one that's currently going through the lawsuit itself, that was growing. So as a result, I ended up kept on buying more and more into Alphabet, and actually ended up being a good year for me. Now, the company that I actually do regret a bit happened to be my Apple stakes. All right, this year I did sell out of Apple and transitioned the money into Chipotle. Now, for people that are new, the reason why I had done so is that in beginning of the year to middle of the year, Apple was going through very negative headwinds. And the issue I had with Apple is that when you look at their products, with each iPhone that was being released, they seemed kind of like a copy and paste essentially, and the innovation that Apple was coming up with, they were no longer the same type of innovation that I used to remember. I thought, you know what, I'm gonna sell out of the company and buy it into Chipotle. Now Chipotle did have a big increase, but not as a big increase as Apple. What ended up happening with Apple is that people started to realize that if you happen to lose your Apple phone, your Apple device, the next device you're probably going to get is another Apple phone. All right, and this is something that had come to me personally, is because with all the accessories that we have with Apple, we have the Apple Watch, we have the Apple headphones, that if we happen to lose our Apple headphones, or the phone itself, we're going to have to get another iPhone. Right. And when we buy into an iPhone, I have an iPhone 15. The natural instinct of people that I'm betting on is that people will naturally buy into upgrading the current phone. Now, it's unlikely for me to go from an iPhone 15 to an iPhone 14 or 13. And that's because I believe a lot of other people are like that. I think that's what the market realized about Apple, that hey, doesn't matter if the new product is so much better or just a little bit better, that people are still going to buy into the Apple iPhones. Just because it's like if you don't, they have sticky products like the watch, the other types of ecosystem that they have, the AirPods, that is hard to trade out of an Apple phone. Now, in terms of Chipotle is actually a new holding for me. I bought into it around $61 in September, and it's kind of staying a little bit flat. Now, this is a company I will continue to buy more into 2025. That's the plan. The reason why is this. Every single time I go into a Chipotle, you guys, I am buying a burrito, chicken burrito for $10.25, and the thing is massive. It's the size of my face. Now, most people, they do think that Chipotle is skimping out on the portion sizes, and when I look into that, you guys, I disagree, because one of the issues that Chipotle is having right now is that they're giving up higher portion sizes than before, and you can see this on their financial reports. When the cost of goods sold, it is increasing, and it's increasing because the portion sizes have gotten higher. Now, my thought process on Chipotle is that if this is a company that can make money selling a $10 burrito, it can make more money selling an $11, $12, $13, and even $14, because I would still be willing to buy these burritos at that cost. I mean, my thinking is like, all right, if people are willing to buy some higher, more expensive chains like Shake Shack, Sweet Greens, things like that, Kava, they're willing to buy more into Chipotle, because I think that for me, Chipotle has the most cost effectiveness. And then one of my biggest stock holding this year is Costco, with Costco going up 40% this year. Now, for the longest time, I actually haven't added more into Costco stock because of just how crazy the gains have been. It's been rushing up and up. And for the first time in a while, this past couple weeks, it actually presented a buying opportunity for me, where it dipped down around 9 to 10%. Now, one of the bear thesis for Costco is that the PE ratio is always high, that this is always a highly priced company, right? It's so expensive at a 53 PE ratio. Now, hey, I agree with that, but I've been buying into this company since 2020, and each and every single time, that's the same exact thesis I always hear from the bears, that this is always a high priced company. Now, when I look at the statements, you guys, the financial statements. This is why I buy into Costco. All right, you look at 2019, the revenues, $152 million. Next year, into 166. Now, this is a company in my eyes that, you guys, is a slow compounder. All right, this is a compounding machine that even during bad years, that this is a company that's still making money during high inflationary periods. They're still making money no matter what. And you look at their gross profits. The gross profits are also increasing year over year as well. So because of that, in the next 20 years, I still believe that this is a company that's just going to compound and compound year over year. And as a result, I believe that's why this company is overpriced. That during good economies, they make money. During bad economies, like during the recession, they're still making money. Now, one of the things that I do got to give it to bears is the cash flows. All right. When you look at the Costco cash flows, it is not as attractive as their gross profits or their revenues, because there are times, you guys, where the cash flows are increasing like a big jump, like we did from 2022 to 2023. We had a big jump in free cash flows, but then this year we actually had a lower cash flows, and then same thing from 2020 to 2021, where they had less cash flow. On the cash flow aspect, I totally get the understanding that this is a company that could struggle on that part. But when you look at the top line revenue growth, it's just a slow compounding. And as a result, with this 9 to 10% pullback, I've actually considered of adding more into Costco. And for people that don't know why I like this company so much, well, one is that they can make money during good economies and bad economies. Not every single company can say that. There are certain companies that when a recession happens, they just fall apart. They can't make money. The stock prices plummet. Second thing is the retention on their membership. With Costco, the main way they make their money is through the memberships. All right. And with the memberships retention rate being more than 90%, that means that out of 100 people that sign up for a Costco membership, 90 or more of them are going to return to sign up for another membership the following year. That type of retention rate is better than even Netflix itself. That's another reason why I invested in. And then the third reason why I like this company a ton is because of the store counts. Right now, Costco has the formula figured out. They know how to make a successful business, but they have less than 1,000 stores outstanding. I believe that number can increase a lot more, especially internationally. And I do believe with Costco that their e-commerce business can grow a lot more. And as a result, I'm gonna go ahead and keep on investing into this. This has been a company that has carried me throughout the past few years, and I hope it does continue to carry me more into the years.